So when you're choosing your lender partner, it's important that you feel good about who you're working with, that you have a good relationship. You can call and talk to them. They're going to be in your finances in your back pocket. So stay tuned to this episode of Relax, I Got This with Steve and Dana Hakes of Uptown Funding.
A real estate transaction is potentially the largest investment we make in our lives. Whether you're buying and selling your personal home or investing in real estate, you need the knowledge to make the right decisions. Get ready. Robin is a Texas realtor and has the experience to give you the information you need to make the right decisions. Welcome to Relax, I Got This with your host, Robin McCoy.
Welcome back to Relax, I Got This, the podcast all about real estate. And I have some more lender friends here with me today. And this is Steve and Dana Hakes. They are the owners of Uptown Funding.
Hello, how are you?
Steve is the CEO of Uptown Funding. And it is, like I said, it's a family-owned mortgage business or mortgage brokerage, I should say. And they've been in business since 1999. Uptown can lend on 1 to 4 family properties. So your single family, your condos, your townhomes, all the way up to commercial properties, multifamily. So like your apartment buildings, things like that, office and retail centers. Over the years, Steve has served as the mortgage industry as president, vice president, secretary, and treasurer of the Tarrant County Association of Mortgage Brokers. So you wore all the hats.
Yeah, kind of go through the process.
That's right. You start one, you got to work your way through. There's no abandoning the ship midway. You've got to get started.
It's one of those volunteer things that you're hooked for 5 years.
Yes, I'm familiar with those. Very familiar. So I know Dana and Steve, they actually office right next door to me here at our Keller Williams office. And like I said, they are a family-owned business. So what does that feel like in the mortgage business? You've got your kids working for you. It's, they're a married couple, by the way. They've been married a long time.
40 years.
40 years.
Yeah.
So what does it look like to build a business in mortgage with your family?
So let me kind of back up a little bit. I was in the corporate world and was traveling all the time. And at a certain point in our life, Dana and I looked at each other, and I was gone a lot as vice president of Pioneer Electronics, and then senior vice president at Frigidaire Corporation when I gave my resignation, which was one of the toughest decisions I ever made. But with Dana's support, we looked at trying to find ways to stop my travel. Right. And I was covering the nation. I thought was always gone. And so we had saved up a lot of money, or at least what we thought was a lot of money back then. And that was 22 years ago. And we were going to do this mortgage brokerage thing part-time and see if we could get it going. And one day Dana said to me, when I was fretting over doing another downsize, right size for the major corporation, giving out people's pink slips and their packages, and it just tore me apart. She just said, why don't you just put your name in there and just do this full time.
Let's just go ahead and slide your own pink slip in the pile, and let's just do this.
So that's what we did on that. That was on a Friday. And on Monday, I turned that in with everyone's surprise. I said, I can't do it anymore. I can't do this downsizing thing. And I watch people crumble. And it just really was hard for me. I was too soft, I guess.
Hey, you know what? That's not a bad trait.
Yeah.
My dad told me a long time ago, if you ever get used to firing people, you do it too much.
That's exactly right.
Yeah. Yep. And so we decided that we could take my skill set that I had there and Dana's great customer service attributes and start a company from our kitchen table, and which we did. And in about 3 years, we had 36 employees. We were a mortgage banker. We were funding all of our own loans, much like you would see on a Supreme or Caliber or someone like that. We were at the same level. And we were working very diligently until the crash happened in 2006, which we did not expect, hadn't lived through that. So we had to downsize again, and I had to do it all over again.
You're getting away from that, man.
And these are the people I know, their kids and everything. It was really difficult for us. And we're going through a little many of that right now in the mortgage business, where a lot of major
Sure.
corporations are laying off thousands of people. And they have been for the last 3 months. I mean, there have been major companies that have left the space completely because of lack of volume, and it happens when real estate doesn't sell, and we've had kind of a pause in the market, I would call it. But as far as us being a family-owned business, it's me and Dana, and my oldest son Scott does a lot of the marketing stuff for us, and then we have a team of loan officers and processors behind that. And Dana's president of the company. She's my right hand, my consultant. We really make better decisions together than I used to make on my own. And I've learned that after 45 years of being together. So
Did it take you all 45 years or?
Yeah, pretty dang close.
That's funny.
Yeah, in fact, I think I just realized it. She's great, and so she's not talking a lot today because she's lost her voice. So so I'm trying to help out. But the difference in working with us and working with someone else, and we've been a mortgage broker, we've been a mortgage banker. After the crash, we went into an FDIC bank, and we worked there, and then we realized why we always said we could always beat the banks because I was getting beat. Then went back into brokerage. We decided strategically not to be a mortgage banker when we came back out in 13. And the reason being was the pricing. When you look at something look at it like a piece of cake. You have your raw price, and that is what Fannie Mae charges for that rate. And then you have to put margin on top of it for the if you're working in a bank, you got to put the bank, you got to put the branch, you got to put the branch manager, and then you put the loan officer. And so your price for that rate, cost of it goes way up. So when we did an analysis by being a broker instead of a banker, we could take out about 2 of those layers. So we could go to market without charging fees, where other people have anywhere from $800 to $1,500 in underwriting, processing, admin fees, those kind of fees. We decide not to charge it in that because we don't have to have that overhead where we have a bank on every corner, or we have a branch manager for an independent. Like before, when we were mortgage banker, we're funding our own loans. We have our own closing department. We do all that, and that's what they do. But then on the sales side, they have branch managers who are getting a margin bump for everything that they're doing. They got to get paid.
Sure.
And then you have their loan officers that work below them, and all the processors and team.
So essentially you're taking out, I don't want to call it a middleman, but you are taking out a big layer of people that aren't necessary for what you're trying to do.
Right. The difference in price that you'll get from an Uptown Funding versus another mortgage banker is somewhere in the neighborhood. On a $250,000 loan, you're going to save anywhere between $800 and $2,500.
And when you're going to a closing table, that can be a lot of money. That can be a lot of money when you're
getting the same rate in the same term.
Okay.
And so that's why we decided that brokerage would be a better model for us and for our clients, moreover, and for our realtors who refer people in. And so that's really the difference. And then when it comes to family owned versus working for a corporation, we have a philosophy at Uptown Funding. We treat all of our clients like our own family. We give them the advice that we would our own children or our siblings. And I think we take a lot of pride in that because we're willing to say, hey, you shouldn't do that. Or you should wait. You should wait and not buy a house today. You might need to save some more money. We are doing a lot of first-time buyers. A lot of our kids' friends are coming to us.
Sure.
And a lot of millennials are starting to come out.
Yeah, they are. They are one of the largest home buyers out there right now. They're in that late 20s, early 30s, ready to start families, get out of the condo in Uptown and get a yard. And they are some of the biggest influx of buyers.
Yes. And they're a little bit different too, Robin, in the fact that, a lot of these younger generation kids, they're self-employed or they're you know, have a job and maybe they do something on the side, or they don't use banks, they use cryptocurrency, you know, so we're learning
Or
as we,
Venmo.
yeah.
You want
or
to,
they
Yeah,
pay
don't
back-
ask them to write you a check. Never
No,
ask them to write you a
that's
check.
it. So that comes with its own little bit of challenges, as well as we're having to shift into, you know, our lending practices, if you will.
Yeah, it's different, isn't it? You know,
Yes.
like you said, Venmo, I mean, you know, and it wasn't so very long ago, all option and earnest money and things like that had to be taken to the title company in the form of a check. And, you know, people are like, well, where do I get one of those?
Exactly.
You know, so I
exactly.
mean, that was not so very long ago. Now it's even more electronic than it was then.
Absolutely. Yes.
So
and that works two ways. I mean, one, it streamlines our process. Two, technology has taken us to a whole nother dimension in the mortgage industry. And we used to send out checklists, and we would pick up documents from people, or we would, you know, God forbid, people would want to email us their tax returns and all their personal information. So we have a very secure system where we send out a checklist. They click on it, they upload directly into their online app that's secure and two-step verification.
yeah, and they can do that
authentication.
overnight at midnight while you're sleeping, and you wake up in the morning and there it is.
That's right.
That's nice. Yeah.
Yes.
So what are some of the challenges right now? Because, you know, interest rates are twice what they were in January. Lots of things have gone on since about June, you know, in the last 5 to 6 months. Many things in the real estate market. So as Steve said, these big major companies and banks are laying people off because the refi business went down, because you can't refi at 3% anymore.
Yeah.
And, you know, buyers froze. Inventory is still a challenge. So how does that affect the buyer, the affordability? What are you seeing out there in the way we're getting buyers into homes now?
Well, one thing I'll tell you is that I think it's a pause while people digest things, right? We've seen home builders with more cancellations of homes that they were building for people that qualified at 3.5%, and now it's 7%, and they don't qualify anymore. So I talked to one builder who normally sells 70 homes a month. He sold 7 last month
Oh my
he had so
gosh.
many cancellations.
Wow.
And so
I hadn't heard that.
it's a dramatic effect on those type things, because people were planning so far out, took so long to build a house. But when regular transactions, which you deal a lot in, Robin, is, you know, just your people want to sell their house, and another person wants to buy it. Last week or yesterday, there was a report came out that mortgage for purchase applications have been the strongest since June.
Oh, that's good to know.
What
So they're
I think the pause may be coming to an end. People are saying, okay, I guess 7 is the rate, or
7's the rate, right?
7s or 6s. I just did a research for 15 years before we started our business in 1999. Rates never went below 6, and they were as high as 18 or 15. And then, so we're seeing some creative programs out there. One of the things that I try to preach to our clients is don't try to have a crystal ball. Don't try to look into the future. I've heard some loan officers and realtors say, well, just, you know, the term was buy
the house, date the
marry
rate.
the home, date your rate,
Yep.
right? Marry the home, date the rate. Well, to me, that was like, wow. I hope people aren't saying, okay, I'll buy the house, and I can't really go out to dinner anymore, and I can't do this while but the rate, my loan officer told me, or my realtor told me, that rate's going to drop by 2-3 points in 6 months. So I'll be okay. I can hold my breath for a while. Well, I know what it's like to be cash or house poor. We've done that in our lifetime, where we stretched when we had young children, and it's not a happy life. And so my feeling is, what I'm telling people is, if you're comfortable with the monthly payment today, then go ahead and make that purchase. And then if you may get an added bonus years from now, where rates may drop down into the 4s again, or 6 months ago. No one knows. I mean, we were in uncharted waters. This COVID thing and the inflation and everything that's happened is, we've been in the business 23 years. We have not seen it. I've never seen rates go up like they did from June to now. So rapid.
It was literally, I think, overnight. There was one thing, and then you woke up the next morning and they were 3 points higher.
Yeah.
And then you went to sleep and you woke up the next morning, they were another 3 points higher. You're like, wait.
Like, wait a second, what happened in between?
Yeah, but all along, I mean, when we opened our business, we were doing rate 7 3/4 rates.
Sure.
And so we never even thought we'd be in the 5s ever.
Do you ever think you're going to be in the 3s?
Yeah, and I don't think it will ever return to the 3s in my lifetime. But and that was all because of artificial inflation. Why did rates go down into the high 2s and low 3s? Because we were in a long-term recession. They were trying to stimulate things. COVID hit, so the economy just kind of froze. So they just dropped the rate to try to make something happen. The Fed controlled that. So, once inflation started to take off, the supply chain caught up, everybody's, doing well in their jobs, and the unemployment's not there. So all of a sudden they got to hit the brakes because things can get out of control really quickly.
Well, it's just a pendulum, right?
Yeah.
And it's gonna, and over each year it moves this way or it moves back this way, and it's in an effort to keep things rolling forward. It doesn't mean that anything's a big giant crash and we're going to end up, foreclosure. I get people looking for foreclosures. I'm like, well, good luck. I mean, I don't know why that's the only thing you want. I mean, let's just go find the right house at the right price.
Yeah. So it comes down to that. Are you comfortable with monthly payment? Is your job outlook solid? Do you feel comfortable? Then go ahead and make that purchase. I think that's where we're at today. People are starting to say, okay, I've waited 6 months. Rates really, I don't know what's going to happen, but I can afford this house at 7%, call it. They're doing it. So we're starting to see more pre-quals in the last 2 weeks than we've seen probably in 2 months.
Well, that's
So
encouraging.
we are seeing a lot of realtors are calling us with their clients and saying, hey, let's get them pre-qualified so I can get out and shop and things like that.
Well, and it's not, they're not having to come up with extra cash either, right? The 20, 30, 40% or $40,000 above appraised value, not even list price. It's like whatever the appraised value is, that's cold hard cash.
Yeah.
Right.
And that has, I think, probably given buyers a better sense of, okay, now at least I know what I know.
Yeah. And
There's no mystery about where am I going to end up? And then I'm under contract and I look at all the numbers and now it's like, oh my God, I can't buy that house, and give them $20,000 too.
Exactly.
Yeah. And that's where we had some issues in the last year or so because people were offering way over ask price with no real foundation on what that house was really worth.
Yeah, none.
And so that got really tricky and made me as a lender uncomfortable. And I'm sure you as a realtor uncomfortable because you didn't want to have somebody pay $40,000 over list price and then all of a sudden a major correction, which you didn't see coming, has happened. So now you get to get that same house for the list price.
Yeah.
And so, but we don't know how long that's going to last. I heard somewhere that Dallas-Fort Worth was going to be down 15% in value on real estate. A lot of it in commercial.
Yeah.
Commercial, which we also do, has really come to. They say it's down 15%, but there's not enough data because the transactions stopped.
Well, that's what, when the whole pandemic started and everybody went home and these big office buildings and strip centers and all these things were suddenly empty. And I wondered when this is over, how many companies are going to come back, right? My husband still works from home. They have a big, giant empty office building down by Cedar Hill. So what does that do to the commercial part of all of this?
Well, one, for the people that own commercial real estate, they've got a lease. And that lease is being paid by those companies. So whether
Okay.
there's somebody in the office or not, they're still getting paid. Now, what may happen is at the end of the lease, those companies may want to take less space.
Right.
So that really hasn't hit the office space yet,
Yet.
unless the lease is coming up right during COVID,
Sure.
right? So, but we are seeing more shared space like WeWork.
Mhm.
And I think with those suites, something else suites
Yeah.
in the Metroplex. Yeah, so that does, office is an interesting topic. I mean, I think it'll always be office. I think people like the camaraderie. I think they work more efficiently when they go to an office versus coming home and being distracted. Some people can work from home. Some people absolutely cannot. Yeah.
Not me.
And so, and I've had people, my daughter-in-law works at Southwest Airlines and she's in one of the executive teams, and she likes going back to the office. I mean, she feels disengaged, even though the Zoom meetings happen like this. It's very, it's a lot different when you just have conversations and, talk about other things about your business.
Right. Right.
So I
Well,
think
I think
commercial-wise,
that's true too.
yeah, so commercial will be interesting. I think we do a lot of apartment lending. We're Fannie Mae and Freddie Mac apartment correspondents. So we have great pricing on apartment lending. And it's really for the over $1 million type purchase, probably $1.5 million and above. And those, Fannie Mae has announced that they feel that the amount of, I want to say it was last year was $3 trillion in multifamily loans, and they're taking their estimate for 23 down to $1.8 million,
Is that right?
or $1.8 billion or $1.8 trillion. So, yeah,
Billions
I'll
of
get it. I'll get it.
Lots of
One
zeros.
those it's off 40% as well. So that was the point, So,
But that's
But yeah.
interesting too. You guys do multifamily, you do commercial lending. So investor, you can handle those big, I know you hotels, things like that. You work in that whole space as well.
right. Yeah, and Dana does it. Dana really focuses in on the residential consumer. We try to divide that up because it can be a big distraction.
Sure.
And it takes 3 to 6 months to close a commercial deal. And so those loans get kicked out by our loan officers to myself and Scott. And then Dana keeps focused on the residential and running operations there and that team.
That's
And
good.
making sure that we deliver our loan docs at least 2 days before closing, so we have a very smooth close.
Excellent. Excellent. Yeah, that's, it's some of these little things that a lot of people don't realize go on, because on my side, right, I go find the house, we get the contract negotiated, we get through option period, and then it's kind of you and title that, and we show up again when the appraisal comes in, and we talk them through that, and then we kind of come back and then we go to close. So
Yeah.
there's a lot of things that in that 30-day of a residential, a transaction, that 30-day from contract to close, there's so much that you guys are doing.
Yes. And
So what can a buyer do for you to make sure you get those documents 2 days before closing? And, what sorts of things do you struggle with maybe in getting from borrowers? Is this the year that you're going to stop paying rent? Is this the year that you are going to finally purchase your own home? But where do you start? How do you get your questions answered? Well, I'm Robin McCoy, and I'm a Texas realtor with Keller Williams. Relax, I got this. I have a home buyers masterclass the first Saturday of every month, and it's free to you, and it's all online. Just text the word masterclass to 214-226-3770, and we'll get you registered and on the path to home ownership. What sorts of things do you struggle with maybe in getting from borrowers?
I would say the biggest thing that you can do to help a loan officer to get your loan through quickly is to be responsive to correspondence.
Yeah.
And
Answer.
Answer the phone or a text or an email. We try, what I try to explain to our clients is it's not just me and title. We have so many people's hands that touch this file along the way before it gets to the closing table. That it's almost like managing a team to try to
Sure.
get each of the puzzle pieces together. So at the end, it all comes together the way it should be. So
Yeah.
I would say, listen to your loan officer. We tell people right up front, don't move money around. Don't quit your job.
I
Don't
tell
go
them
from
that.
a
I tell them that
W-2.
too. I'm like, look,
Yeah. So
for the next
listen.
30 days, this is what you will do and not do.
Yes.
And then after that, I don't care what you do with
You
your
can
money.
do whatever. Exactly. So I think that is our biggest bone of contention is people maybe dragging their feet, or you ask them for a document and it can be 3, 4, 5 days. Oh, well, we went to on a cruise and I'll get it to you then.
Yeah.
Yeah,
Well,
and 3 to
I'm
5 days.
on
What?
the 23rd, but I'm on vacation between the 10th and the 30th.
Yeah. Well, people don't understand that 3 to 5 days is a long time in this process, right? Because
Right.
I mean, the fact that they need it, that you need it, the processors and underwriters need this document. It's not so much what's in it, it's just they need it. And if they don't have it, it's holding up the next
That's right.
thing. The file doesn't move. And when a file doesn't move for 2 days, it's getting hairy for that drop dead closing date.
That's
Yeah.
right. And what they don't understand is just because you get me the document today doesn't mean the underwriter is going to look at it as soon as I upload it. They have, 30, 40 files that are in line, maybe ahead of yours.
Yeah,
So it's all kind of a timing thing.
sure.
So
And it's
that's
better
my-
when the underwriter gets to your file that all the things they need are inside that
are
file.
there. Yes, because you don't
Not
want to
having to come back
to the
'cause then
end
you
of the
go-
line.
Back
Exactly.
down here.
Exactly.
Exactly.
So my advice would you just work closely with your lending team.
Yeah.
And make sure that you're very organized. And if they ask you for a bank statement, all pages, don't send just page 1, 3, because it was a two-sided, you forgot to scan the other side. Just pay attention to what's needed, be very responsive, be organized. You're about to make a transaction. It will be the biggest loan you'll take out in your lifetime.
Yeah.
Sometimes I've always said to people, who give us a hard time, or they're having a hard time, gathering up what we need to get their loan approval. I just want to walk in with a briefcase with a handcuff on my hand and pull out $400,000 in cash and go, now, here's your money. You promise to pay us back, right? See what kind of shock that would be, rather than.
And I can't hand it over to you until you give me page 3 of that bank statement.
Yeah, exactly. You're missing that W-2. And I know you say your old employer doesn't have it, but he does.
He does. You just have to call him, and you walked out on that job. And I know you don't want to call them.
Yeah, exactly.
However, so, okay, so let's look at the other side, some of these other things that because you are who you are, you're able to do, right? So you can do reverse mortgages. There's all kinds of crazy talk about how bad they are and this and that, and they're not. I mean, I guess at one point in time, they were kind of sketchy, but I know that just like everything else in the lending process, those things have been reined in.
Yeah, it's kind of like people say that no income, no asset loans were sketchy back when the subprime days before the crash, right?
Yeah.
What happened in reverse when it first came out, and it is a government FHA product, all right? So, but what happened was they made it so easy to get because they wanted to help seniors. They didn't look at the unintended consequences. And what was happening was they didn't have to qualify anything. All they had to do was breathe and live there, and they had to be over 62. And the older you got, the more money you got if your house was paid off. And sometimes these people got a lump sum of 300,000, and they blew it, and they didn't pay their taxes and their insurance, and then they got foreclosed on because they were in default. Because part of the note says you have to pay your taxes and your insurance.
Yeah.
Because otherwise, those people can foreclose on, and HOA dues.
Yeah.
Because HOA can actually foreclose on. So now what happened in the reform was they you have to qualify to get it. So we have to see your Social Security income. We have to see whatever income you have from retirement. We have to look at your assets that you have. And sometimes your assets can cover your taxes and insurance well beyond your lifetime. So then you don't have to look as much at the income. It is not credit score driven. So
Okay.
it's one of the unique ones where it's actually manually underwritten, meaning that when I first got into business in '99, I can't remember if scores were involved, but I remember being trained to look at a credit report and look back and see if all the lates on their credit report were in like a 1 month period. And then we would highlight it, circle it until we'd write a letter saying, I lost my job, or I had my husband died, or whatever it was, and I couldn't pay my bills during the time frame. But from that point forward, for the last year and a half, I've been fine. And we would get that approved.
Right.
But in that situation, if you have a 610, you're not going to get approved. Or the same client. So sometimes I think the manual underwrite's better. But the one thing about reverse is you can, and a lot of people do have credit issues if they had health issues and there were medical bills and medical payments and things like that.
Sure.
And so the good part about it is all you have to do is write your letter of explanation about why you were late. And then you can't just make it up. You've got to actually provide some source document behind it saying that I lost my job. Here's my termination letter.
Right.
Or my one gentleman, his wife had been in near death for 6 months in the hospital. He goes, you know what? I didn't care about anything. I didn't care about my bills. I went to the hospital every day, and I cared about my wife. And I didn't pay anything because I was just, focused on trying to get her better in her health care. So his credit went to crap.
Sure.
And so I wrote that in a letter. I got a copy of the medical bill when she checked out, and they approved it. And his credit score was actually like a 550. But you don't have to make the payment. The thing about reverse is we should back up a little bit for those listeners that don't know what a reverse is.
Yes.
So it has been reformed. There's a lot of misnomers, a lot of stuff on the internet that's false. So don't go to the internet and look and try to figure it out. Go to our website, Uptown Funding, click on reverse mortgages, and there's a huge question and answer area.
Perfect.
So you just go to uptownfunding.com, click on reverse. It'll tell you all about it, and you'll answer about all your questions. So a couple good things. One is we're not even going to take your application until we're going to give you a form with a number on it, send you to a HUD education specialist that's going to teach you and answer any of the questions about the proposal we gave you on your reverse. So it's a third party. They're going to go through and answer any questions. And a lot of times we find ourselves answering the same question several times.
Sure.
And that's okay. We want people to understand it, right?
Sure.
The other part is that you have to qualify, which we just talked about, and that you always own your home, no matter what. I mean, people will say, well, and I've had people ask us, well, that means, I don't have my house anymore. The bank has my house. Well, no, it's just like any other mortgage. You're going to get a loan, and when you die or when you move out, or if you decide to move, you sell it, you pay off your mortgage.
Yeah.
That's what it is. The difference is you don't make a monthly mortgage payment. And you have to be disciplined to save your money for your insurance and your taxes and pay your HOA on time. Those are the three things.
So you don't
So
take the 300,000 and go blow it in Vegas.
Yep. I always say open an account, do your own escrow account. We talk about that with our clients on how to make sure they make their payments and they don't get in that situation. So, but for Dana and I, it's one of the most rewarding loans that we do. We've had people buy us dinner afterward. We've had people in tears, during the process, and then at closing because we've reset their life. And we've had people that have said, one gentleman we met with one of the Keller Williams agents there in Dallas. That gentleman's 89 years old. He's got about $1.6 million in the bank, and he's always lived frugally, and he lives in a $350,000 condo, and his truck has gotten broken into in the last 6 months twice. They've stolen his catalytic converter, and the neighborhood's changed. So
Sure.
he said, you know what, I may only live for 3 years, but I'm gonna live in style. I'm gonna upgrade my house. And so he's looking, our agent there is looking to get him $1 million to $1.2 million home in a nice neighborhood with a garage so he can lock up his car.
It's truck. Yeah.
Thing. But yeah, I mean, there's a lot of reasons people would want to reverse. The great part is you have, you know, it's available as long as you're over 62. Of course, the average age of reverse client is 73.
I
Right?
was going to say it had to be, it's probably higher than, you know,
Yeah.
60s, I would imagine.
Yep, it's 73, and the older you get, the better the loan looks to you.
Now,
Because
do they have to own the house outright or can they still have a mortgage?
they can still have a
So
mortgage.
it's,
so that-
okay, so it's just remortgaging it just differently.
You can
Yeah, refinance it into that, and you stop making mortgage payments.
Okay.
And typically, we pay off their cars, credit cards, pay off all their debts. So they're debt-free in this inflationary time. They can breathe more, and it really resets things for them.
Yeah, and what Steve and I came to realize with inflation the way it is right now, is that people who are on fixed income, Social Security or retirement are really getting squeezed these
Yeah.
days.
Yeah.
Groceries are higher, gas is higher. And if you have an unforeseen medical bill, that could just do you in.
It could.
And so they're sitting on all this equity. And so now they're thinking, well, why not tap into that equity? They also can use some of the lump sum that they get at closing. And within the year, they can tap into another line of credit that sits there. So it is a little bit of peace of mind for day-to-day things that come up for these seniors.
No, but as soon as they, just like you said, with any other house, because there was something that went along on some Facebook group I was watching, and, you know, people talk about what they don't know.
Right.
And, you know, that, but when you either die or decide to leave the home, right? So you're going to move in with kids, you're going into assisted living or anything like that, then the house must be sold and the loan paid off.
Right.
So somebody was saying, well, if you want to leave it to your kids, well, the kids need to buy it then.
Yeah.
Right? You can't leave it to your kids anymore because you got a mortgage on it. So they're going to have to buy the house.
Right.
Or,
Exactly.
you know, or sell it and just get whatever equity.
Yeah.
And let's say for some weird, odd reason, you outlive, your house is worth 200, but your mortgage is now 300. You don't have to pay that deficit because it's FHA insured, and it's gone. You've
Kids
lived
don't
right.
pay for that.
Yeah. So,
You know, and it's just such a, like you said, it can bring a lot of peace of mind
yes.
when you've got some folks that have been, you know, they get to stay in their house.
Yeah, that's right.
I mean, that's huge.
It
That
is.
they get to stay in their house longer. They get to age in place longer. They don't have to, you know, because we all know we're getting older and things are harder to do. And,
Yeah.
but if you can stay home,
Yep.
Yep.
it's just
Well,
better for
And
here.
for you, Robin, I mean, if you're talking to seniors that are in a 2-story home and their bedroom's upstairs, you know, they may want to downsize into or right size into a ranch.
Yeah.
And so that's an opportunity for realtors to really help seniors. And that's what we talked about during my training I did there the other day is, you know, trying to make their whole lifestyle correct. And they can work with their financial planner too to find out how to do that as well. And although financial planners can't do reverse mortgages, they refer us a lot.
Yeah. Because they understand them too. And they understand, and the financial planner then has more of a insight into their whole financial
That's right.
place where they
Right.
are. And then there's this house, right? It's
Right.
2-story. And I guess what you're referring to is reverse for purchase,
Yes.
right? So
Yeah.
that it's not just the house you're in, it's the house the right size house.
The
That's
one
right.
you want to be in.
Yes.
Right?
Maybe it's
your
smaller, maybe
neighborhood's
it's a
changed.
1-story.
Yeah.
Yeah, maybe your neighborhood's changed and, you know, I have a $350,000 or $400,000 house and everything's going up in price. I really would like to have like a $500,000 house or $600,000 house in another neighborhood that's a ranch, it's just right for me. Well, I can't. Well, but if you own your house free and clear, right? Yes. Well, Robin can sell it for 400,000. You take that $400,000 cash, put it down on your $600,000 house, and you still don't make a mortgage payment. So think of it that way.
Yeah.
And that's what's really great is that you can actually upgrade someone's life in their latter years.
That's same. And, you know, we just don't talk about these things.
Yeah.
You know, I mean, we don't talk about it because people on social media want to say, oh, it's bad and your kids can't get the house and, oh, it's a scam and, oh, it's this.
Yeah.
And when in fact, if you just stop and talk to the right people,
Exactly. Yeah.
talk to the right people, because, you know, as much as I love Tom Selleck, he's not really the guy that should be talking about reverse mortgages to you. I mean, you know, I like him a lot,
Exactly.
but I don't know that he's an expert.
Yeah.
Okay.
He's a good spokesperson.
He is a great
Still good looking.
spokesperson. All right. So what didn't we talk about? Is there anything that you want to make sure we get out today and that maybe we didn't touch on?
I think one of the things that I would like to say is, like, working with an Uptown Funding, you have access to the wholesale market at wholesale rates and all that. And you have access to a lot of products that your banks and mortgage bankers will not do. They just don't have access to them. And one of the things that we do is we can do for self-employed borrowers, we can get very creative, being that even though their tax returns may say one thing, their bank statements tell you the truth. And that's the money they're really earning, right?
You can work really well with self-employed people in that way.
Yeah. We'll use your bank statements for your income. We can use a 1099s for income. We can use now even a P&L from your CPA or from you that's signed off from your CPA or that you testify that it's true as self-employed. But in those, typically in self-employment, we should touch on that, is that you really need to be self-employed 2 years to be considered self-employed. So going from a W-2 job to self-employed can hurt you if you want to get a house within that first 2 years. Okay. So I have to have 2 tax returns saying you're self-employed and a letter from the CPA saying you've been self-employed 2 years. And so that's when you really fall into that category.
So that's the timeline. That's the plan, right?
Yeah.
We just talked about everybody's self-employed or they got a side hustle, and people's work things are all very different than they were 3 years ago, 4 years ago.
And the other thing I'd like to, with the new age of people coming into buying homes, they're all about going online and finding maybe a real estate agent or maybe a lender. And we have to be very careful with, Texas has some interesting lending laws when it comes to cash outs and different things. So someone who's in, Chicago, a loan officer up there might not be that familiar with Texas law. So just be careful with some of the lenders and believing, you really need to know some of the specifics and be comfortable with that.
Well, that goes back to all real estate really being hyper local. Yes, because whether it's on the buying, on the real estate, on this part, on the front part, whether it's this neighborhood or it's state laws, state regulations, right? I mean, lending laws, you guys are regulated by the Fed a lot. And then you've got Texas laws and requirements.
Yep.
The Texas Real Estate Commission is different than the Florida Real Estate Commission.
That's right.
So it's important. And I think what I really try and get across to people is talk to somebody that's sitting here.
Yes.
Because your uncle's brother's cousin who bought a house once in Nebraska is not going to know. They're just not. And I appreciate their opinion.
Sure.
And yet it's not the same as buying a house today in 2022, almost 2023 in the state of Texas post-pandemic.
Absolutely.
It's just different.
Absolutely.
Yeah.
And when you enter into a contract, what people don't realize is how important a relationship with your lending partner is, because on a Saturday, if something goes awry, you want to be able to call or text or be in contact with
Yeah.
your lending partner.
You need to
or
be
your real
SOS.
estate agent.
SOS.
You're going to be out of luck. So
Because it happens. Yes. And I've been
yes.
there. And
So
I've been there.
that's-
So it's just important.
It is.
You know, we are all a team. When a buyer goes out to purchase a home, it's not just me and it's not just you. We are a team of people
Yeah.
that all have to work together
That's right.
between realtors, the lending people, the inspectors, the insurance guy.
Insurance.
Everybody needs to be able to do
Yep.
this so that we can take this package over the next 30 days and get it where we
And
all
get
want
it
it to
where-
go.
That's exactly right.
And
right.
sometimes, you know, the goal is to get to the closing table. And
Yes.
all the other stuff doesn't matter if you can't get there.
Exactly.
The rest of it just doesn't matter.
Nope, you're right. You're so right.
So,
So
all right. Well, thank you so much. And I hope your voice gets better.
thank you. I appreciate. Thanks for pinch hitting for me.
Yeah, you're welcome.
All right. Well, thanks everybody for dropping in to Relax. I Got This. Remember, who you're in business with matters. Make sure you check all the show notes for Uptown Funding and Steve and Dana Hakes, and make sure you subscribe, and we'll see you next time.
Thanks for joining us for Relax I Got This with Texas Realtor Robin McCoy. Check out all the show notes for contact information on Robin and our guests and to access your free buyer and seller guides. Also, don't forget to hit that subscribe button so you never miss a conversation. Thanks again, and we'll see you next time on Relax I Got This with Robin McCoy.